4 ETFs. That could very well be all you need to build wealth over the next 20, 30 years and beyond. And today I'm going to share with you 4 Vanguard ETFs that I personally like, and a couple of them I actually do hold that I'm going to talk about here in this video today. Now, I am not a financial advisor. This is not investment advice, but this is for information and entertainment purposes only. And of course, the prices of these ETFs and the number of stocks that these ETFs hold will not be the same that I am reporting on today as of May 2023. Will likely be different when you watch this video, so please be aware of that. So first up is none other than Vanguard's US Total Market ETF, and that would be VTI. VTI is currently trading around $204 per share and has a year-to-date return of 7.14%. That's a year-to-date return of 7.14%. And depending on when you see this, it could be more, could be less, just like the share price of VTI. VTI is a favorite of mine because it gives you exposure to just about every single US publicly traded company. This fund has almost 4,000 companies in that fund, 4,000 companies that one ETF is investing in, and performance is pretty good with a 10-year performance of 11.62%. And since this ETF started on May 24th, 2001, this ETF has returned an average annual rate of return of 7.79%. Yes, VTI is a favorite of mine because you're going to get great diversification in just one fund across so many different sectors and industry here in the US. Also, the fees for this fund are very minimal. As of May 2023, the expense ratio for this ETF is 0.03%. So for $1,000 invested into this ETF, you would only get hit with a 30-cent fee. And it's good to note that unless the brokerage firm that you're investing in this ETF with is charging you to buy this ETF or to hold this ETF, then yes, your fees are going to be a little bit higher. But if you just own it outright through Vanguard, then you're not going to have any fees other than that expense ratio of 0.03%. And VTI is an ETF that I'm currently buying in my Roth IRA. And if you're interested in knowing what the equivalent index fund is for VTI, then all you have to do is type in VTSAX. That's Vanguard's US Total Market Index Fund. The next ETF that I want to share with you is one that's going to give you exposure to the international markets, and that's going to be Vanguard's VXUS. VXUS is currently trading at $56.30 a share and has a year-to-date return of 9.15%. In 2022, yes, it wasn't doing that well, but as I've always shared with you on this channel, the market is going to go up, the market's going to go down. International markets for some time have not been performing too well, but if you are a seasoned investor, then you understand the market is going to have volatility, not just the US markets, but also the international markets. And the international markets are no exception to this type of volatility that we should expect to see year to year. VXUS currently invests in approximately 7,976 stocks. So between VXUS and VTI, you're getting exposure to over 11,000 different stocks around the globe. And just like VTI, VXUS has a low expense ratio that's going to be 0.07%. So for every $1,000 that you invest in VXUS, you're only going to have a 70-cent fee. For the last 10 years, VXUS has had an average annual rate of return of about 4.27%. But as you can see, the market goes up and goes down. And year to date in 2023, VXUS is at 9.15%. And while I'm not looking for those day-to-day trends or day-to-day investments, I personally buy and hold for the long term. So VXUS is going to be the type of ETF or the index fund that tracks the total international markets, which is something that I have in my 401k, is going to be something that I buy and hold for the next 20, 30, 40 years and continue to hold, knowing that these markets should have an opportunity to get better. I personally expect to see the international market start to get better and better, especially with the competition that we're seeing in 2023. Competition, in my opinion, is a great thing, especially even if it's around the world. So hopefully the total international market ETF at Vanguard VXUS will continue to do its thing and grow and continue to perform very well over the next 20, 30 years. That's what I'm hoping for. And that's why I will continue to invest in index funds and ETFs that have exposure to the total international market. And that's why I like VXUS if you're looking for a Vanguard ETF that invests in the international markets. The next ETF that is going to be on my list is actually going to have a negative performance for 2023. But as I mentioned before, just because an ETF, a stock, or an index fund is down doesn't mean that it's not going to go up in the future. But this ETF is VBR. This is Vanguard's Small Cap Value ETF. And this ETF is currently trading at $153.40 and has a year-to-date performance of negative 2.85% year-to-date return and has an expense ratio of 0.07%. So just like VXUS, for every $1,000 that you invest in VBR, you will get a 70-cent fee. And let me tell you, when you see these funds, ETFs or index funds that are currently trending downwards, that actually might be the time to buy. That's what some of the experts are going to tell us, that when you see these ETFs, when you see these index funds that are not performing well, that actually have a good track record, have a good historical track record of actually doing well. You look at the 20-year performance, the 30-year performance. Well, just because it's having a bad time, a bad year, bad few months, even a bad couple of years, that actually could be the optimal time to buy into these funds. And that's why personally, I would have no hesitation of buying VBR in any of my retirement savings accounts or even a taxable account. And I do think it will outperform those indices that track the S&P 500 or the total market. Small cap value is still a good buy in my opinion, and it's something that I'm going to continue to have some exposure to in my portfolio. Now, VBR has 849 stocks in that fund. Again, the expense ratio is 0.07%, and you're not going to do bad with this because the 10-year performance of VBR is 8.87%, which is going to be higher than VTI, going to be higher than the total international market ETF. And since inception, January 26, 2004, VBR has had an average annual rate of return of 8.29%. So if you're looking at the totality of the performance of this fund, it's actually better than your S&P 500, better than your total market funds. It's definitely going to be one that when you look at it currently in 2023, it's not doing well, but this could be one of those buy low opportunities that if you're looking to get into an index fund or an ETF that has that broad diversification like total market, or in this case, the small cap value, VBR could very well be those ETFs that you're looking for. Next up is going to be a Vanguard ETF that is going to give you exposure to the real estate market. And that ETF is going to be VNQ, Vanguard's Real Estate ETF, which has an expense ratio of 0.12% and is currently trading around $82.15. Now, the year-to-date return of this ETF is 0.59%. Yes, that is going to appear to be low, but when we look at the 10-year performance, when we look at the performance since inception, September 23, 2004, we're going to see that average annual rate of return since 2004 has been 7.41%, and the 10-year average annual rate of return is not bad at 5.12%. But for those of you who are looking to get some exposure to the real estate market but don't actually want to have to buy physical properties, something that I'm being more interested in, not as far as physical properties, but getting into a real estate ETF or index fund, then this could be something that you want to look into, because you're going to get exposure to 165 stocks that are issued by real estate investment trusts, companies that purchase office buildings, hotels, and other real properties. So yes, you're still going to get some of that exposure to the real estate game without having to actually go buy and sell physical properties. You can just get that exposure through this ETF of VNQ at Vanguard. Now, we know that investing in low-cost, broad-based ETFs and or index funds is just one piece of the puzzle to achieving financial independence. The video on the screen is going to walk you through the 7 pillars of financial independence. Click on it and I'll see you over there. Peace.